Good evening, Jayaprasad. I think everyone forgot that today is a session there. What to do? Nobody joined. Shall we wait for another 2-3 minutes and then start? So we'll start from 7:05 because no other participant has joined. Let them. We should give them some time to join. Good evening, friends. This is Prashanjit. I will be taking you through today's lesson session, which is about risk management. Okay. So before I do so, I would request each one of you to go through the disclaimer first. It is very important for you, for me, everyone. Okay then, so let's start learning about risk management. One of the most important factor in trading. Okay, so between profit and loss stands risk. Okay, so risk management is essential to become a profitable trader. It cuts all losses and enhances profit. Okay, so that is what the aim of risk management. Every trade we take, how much we analyze, it can always go wrong, and risk management as a tool helps us to save ourselves from a big loss. Okay, so that is what it does. Okay, once you cut down your losses, and I mean there will be some loss trades, there will be some profitable trades. If you cut down on your losses, then what will happen? Your profitable trades will give you profits, and at the end you will become a profitable trader. Okay, because your losses are minimal in that case. So if losses are reduced, profit is inevitable in trading. Okay, so before entering any trade, we should have a predefined risk management policy set for us. Okay, this is very much important. These parameters, understand friends, this is your business, right? If you are indulging into trading, I believe at certain point of time you want to take trading as your career, right? And if it is so, then if it is going to become your business, then a business is a very serious matter, and for that, and business have lot of risk, and you need to have a policy. You need to have policies for everything. Okay, so we have already learned the strategies part, what we can do, how much analysis we can do, what are the analysis we can do. We have learned that, all of them. Now is the part on the risk monitoring. Okay, and averting loss, I mean averting risk is our motto now. Okay, so these parameters not only helps us to be in the market for a longer time, but also helps us to take a set and forget trade without involving our emotions. I mean, in trading, loss can happen and losses can go up to your head, and I mean, it affects in such a way that your emotions that, I mean, you may, you may not even feel to eat something. This is what happens. This is what happened with many people, right? So it is important. If you do risk management, you will have your, I mean, you will have a good sleep in the night, right? Also, you will put the trade and you will be not tensed, because even if market goes down, you are not going to make a big loss. Rather, you will be out with a small loss. So once you set the particular trade, then you can forget it, because you put your stop loss, you put your targets, and you can go away. Because one thing will happen, either the stop loss or the target. Okay, so this is the beauty of prior risk management, because that helps us to, I mean, remain calm and cool. Okay, trading is a very, I mean, trading is a thing where emotions are very big, in a big way attached to this business. Okay, so the more you can keep your emotions at the bay, the more you will be able to handle pressure, handle, I mean, you can, I mean, the success will be yours. That is the way it happens. Okay, so to keep the emotions at the bay, and to do a set and forget kind of a trading, you need to have a risk management policy. So generally the types of risk, there are many types of risk, but I have just, I mean, broadly I'm going to discuss here. I mean, price moved in the wrong direction. That is a risk you have in trading. After you got the entry, and then price didn't, as per your expectation, price didn't move up, it straight away went down and resulting in big loss. So this is a risk which is there in the trading. The other risk is price gave you a fill, you got your entry, and thereafter price didn't move. Okay, it stayed in below your entry. Okay, so if you are buying, it stayed below your entry, and that too you have bought the particular script in futures and options. What will happen? If you have bought it in futures and options, contracts do expire, and if it is the current month contract and price is going to stay inside your entry till the expiry date of the contract, what will happen? The contract will expire and you will make loss. Okay, if you are rolling over, that's another issue, but generally you lose money if price doesn't move. Okay, so this kind of risk is as well there. Then risk of uncertainty, I mean uncertain events like terrorist attacks or catastrophe, something like that happening. Okay, and that I mean because of that some kind of a fear and greed comes into the mind of the market participants and resulting into big losses. Okay, the price moving in the opposite direction of your entry. So that sometimes happens. So this is a risk you deal with when you are trading. Okay, you cannot predict a uncertain event. I mean, an event which is certain is okay because you can do a lot of you can think that I will not take trade as well, or you may close the trade before that event. So that is something in your hand, but an uncertain event is not in your hand, my dear friends. Okay, anytime during the market, say there is a terrorist attack happens somewhere in India, that's going to affect in your charts. Okay, so this is some risk which is I mean you cannot avoid. Okay, only thing you can do risk management properly so that you are safeguarded. That is what you can do. Okay, the another kind is I mean this is resulting of news again. Some kind of a news happens like earnings, right? Whenever this earnings seasons are there, okay, like in current July month there was a lot of companies which came out with their earnings report, right? So this is the time when you will see a lot, and this happens four times a year, and this is the time, friends, when there you will see a lot of volatility in the market. And if you are an intraday trader, there will be chances that your stop loss will be hit and then the price wins. Okay, so this happens because of excessive volatility. Okay, so a sudden increase in volatility, I mean, can result into loss. So something which is not in your hand. Again, because of the news, you don't know that there is a earnings news and you try to go, I mean, short in a particular script and that actually went up big time and you made a big loss. Many people have that. Again, many people, I mean, they came to know about the news. They thought the news is very good. The price is going to go up. They jumps in buy and the price goes down. Okay. So all this kind of risk are there in the trading, and all this kind of risk can be averted by doing risk management. So then there is another kind of a risk, the risk of technology failure. I mean, your broker's panel may fail. I mean, the lease lines can fail, the exchange can fail, anything in between. Your end, the internet may go off, right? The electricity may go off, anything. Your computer may crash, anything can happen. And the broker's computer may crash. So anything can happen in terms of technology failure. So this is something again not in your hand. So what you can do, the best thing you can do, you can keep a good company's computer, a good reliable broadband that doesn't fail often, and I mean this is something in your hand. You can always keep. The other thing is always trade with a good broker. I mean, who is reputed. Never trade with a broker whose systems fail often. If you have that news, don't go with that. How much cheap it is, right? So it is important that the broker terminals do not fail much. Yes, one time in a year they may also fail because everything is techno. I mean, any software, any hardware can fail, but it shouldn't be like a regular thing. If it is happening regularly, then you should think of changing the broker because that also can lead to loss for you. Okay. So to have a good broker in your side will eliminate this kind of, or to an extent it will eliminate this kind of risk coming from technology. Okay. So the steps for proper risk management. So the pyramid of trading success is, you need to know the entry, which we have learned how to go about the entry. You need to know the exits, which I have defined at the beginning. You need to know what are the exits, the target, as well as the stop loss. Okay. Now, once you have the entry and target and stop loss, the exits, then comes the question of psychology. Now, psychology, as I said, the emotions are very much, I mean, uh, they are there with the trading, and they will always be. Okay. So once your hard-earned money is in stake, you will always feel that pressure in your mind, right? So to keep, I mean, yourself cool and calm, you need to do money management and position sizing. This is the two very important part of your trading. Okay. So if you do proper money management, if you do proper position sizing, ultimately what will happen, this will affect your psychology in a better way, and you will not feel that pressure, you will not be emotional while trading. Okay. So this is the pyramid of the trading success. So entry, you know where to enter, where to exit. You are clear about it. So you have a clear strategy. You know what you are doing there in the chart, right? So this is very important part. The most important part is psychology, money management, position sizing. Understand, if you are psychologically not strong, what happens, even if your trade works, you take an entry, you will not be able to hold it for the entire target. You may close it within 10 paisa profit, or uh, you may close it at cost, and the price moves up to the target, and you will not be able to make money in that case. So psychology is a very, very important thing. And you as a trader can overcome this part only by using money management and position sizing. Okay. So to do this, first we need to create a trade plan for us, because understand, this is your business, and if it is your business, you need to have a plan for your business. Then what you need to do, after you create your plan, you know what to do. I mean, once you have a plan, then you will define the risk parameters of the trade. Each and every trade you are going to take, you will have everything clearly defined for yourself before even you go for trading. Okay. Next, what you can do, you will calculate the correct position size, how many shares you are going to buy at a certain place, so that your risk is always stable. Say you are not going to lose more than 1000 rupees or 2000 rupees. That is the max you can lose in a trade. Okay. So this is what you need to derive at a position size. Okay. So that whatever, whichever stock you buy, whether you are buying a stock which is, say the value of the stock is 1500 rupees. or you are buying a stock which is the value of that stock is 79 rupees. So in both the cases, you have two different trades there. But when you trade, because of your risk management and position sizing, you will find both the trades having the same risk amount. I mean, the loss amount is same. I mean, if you are thinking that, okay, in a trade, I will make 1000 loss maximum, right? So what will happen, even in that trade where the value of the particular stock is 1500 bucks, when you make a loss there, you will only make loss of 1000 rupees. And the time when you are buying a stock which has a value of 79 rupees, and there you also make a loss, you will again stand at a point where your loss will be not more than 1000 rupees. So this 1000 rupees loss is sealed. So you cannot make a loss more than that because of the position sizing. Okay, so how to do position sizing, I am coming to it in next couple of slides, but it is very important that you know your position size before you trade. And this position, if you have a correct position size, that means you will have your mental peace. People do greed. They go and jump into futures. They buy a lot of lots, okay, and they do not do position size. And at the end, because of they buy more lots, their risk is also more, and they start palpitating, and I mean, emotional effect starts happening to them. Okay, all emotional behavior starts. Okay, so position sizing is very important. Then only you will be able to hold the trade till the end. Otherwise, you will not be able to hold the trade till the end. And what will happen? You will close your trade even if it is in profit. You will close the trade early. Or if it is inside the zone, then you will book it at loss because you do not want to take the entire loss. Okay, I mean stop loss. So something like this happens. So position size is very important. Then what happens once you do all these things? You will take the trade and then you will create a trade log and update it after every complete trade. So once you have a trade done, you will update it in the trade log and you will keep it. Okay, so this is very important. Why trade log is important? Because at the end, okay, you will take a lot of trades, and this trade log will, after some days, will provide you some good analytics for yourself. Okay, so this trade log will help you to understand how good trader you are, or how good your strategy is working. Is it working or is it not? Or I mean, is there any way you can make it better? Okay, so this is all the trade log helps. So once you go back to the trade log, and if you check and if you do analytics, you will find whether you are a profitable trader or you are not doing so well. Everything is there. So same way you can go to that trade log, you can review it time and again. Okay, so in time of review, you will come to know, I mean, you will go back to those loss making trades and you will check them, you will review it, you will yourself come to know why that particular trade got stopped out. What was the problem there? Okay, so this is a big way of learning. Learning from your mistakes are the best thing you can do. Okay, so don't shy away, log your trades and then review it periodically. Then we will also put some healthy remarks for future reference, that okay, this is the problem, I mean, this got stop loss because I have missed a level over level. So something like this, you put in the remarks, and whenever you review it again, it will come into your head, okay, this is a mistake I have done and I am not going to do the same mistake, because price will always repeat its pattern, and I am not going to repeat my mistake on that. So put some healthy remarks for future reference as well. Okay, so the step one, as I said, we need to create a trading plan for ourselves. How will we do this trade? I mean, what is the setup which I will trade? I know so many things. I know MIPs, I know break limit zones, I know hidden zones, I know whatnot. MIPs, I mean, uh, reverse zones, right? So I can have my preference as well. This is my business. This is my trading plan. I can have my preference. I like that break limit zone. I can keep on trading break limit zones. I can master it. Okay. So this is what the trade plan helps. I will have my own strategy because this is my business, my plan. You can have a plan from the beginning to the end. Like you will start, where will I enter? Is it a break limit zone? Yes. Or where will I enter? Should I trade the trend or against the trend? Or I mean, how much shares I am going to take? Okay, this much shares I have taken, whether I am going to take it in futures or options or equities. So something like that. Every bit of your, right from analysis to taking the trade, position sizing, ending the trade and review and all, the entire plan of your trading has to be documented before you even think of analyzing or doing the trade. Okay, this is something is very, very important because this is your business, and every business has its plan. Without a plan, no business can succeed. You will go around, you will find some trades, one day it will work, second day it will not work until or unless you have a plan for yourself. The plan is your strategy. Okay. So this is what I was saying. Trading is your business and every business has a plan. So create a trade plan for yourself, your trading style. I mean, when you are creating a trade plan, you need to think about your trading style. Your trading style is very important, my dear friends. That will guide you through the rest of your trading career. So define your trading style. What kind of a trader you are? Are you a intraday trader? Are you a swing trader? Are you a short-term trader, long-term trader, investor? What you are? I mean, are you a jack of all trades, a master of none, or you are a trader who knows his trading style and he is master of that? What you are? So this is very important, okay? So your trading style is very, very important. Once you catch hold with your trading style and you start working on that, you will surely succeed. This is a bet. Now, so this is something is going to guide you through the rest of your trading career. So define your trading style first and write it down in your trading plan, okay? Write down the reason why you are trading, okay? So it may be you want to be a full-time trader or just for investing, or you may, I mean, it's your hobby, something like that. You just need to define it, okay? Write down how will you trade, what strategies you will follow. I mean, how to determine at a trade. I mean, what I do basically, I start with the trend. I believe I am a trend trader, so I have to find out the trend. Once I know the trend, then I will go and find the trap zones, and then I will do the rest. So this is how the trade is determined. This is how I do my analysis. So same way, you have to write down the analysis that you are going to do, and you have to follow that. Okay. So similarly, you need to define your own business rules. I mean, nobody can define your business, right? It's your business and you are the one who is going to define it. So define some rules, whatever. I mean, Prashanjit is teaching me price action. And price action says there is no indicator as oscillator. Nothing works, right? But this is my business. If I want, I can keep it. Who is pushing it to show me way, right? Something like this. I'm just giving you an example here. But if you feel something is good for you, you should implement in your business plan. Yes, as far as price action goes, I really do not believe in, I myself do not believe in any indicators or oscillators, and I do not trade them. But it's your choice, it's your business, right? So something like that, you can have your own rules as well. You can create your own strategy as well. Nobody is going to stop you. Okay. So today, what I am going to do, I am going to share you my trade plan. Okay. And I expect you all to modify it as per your trading style. I mean, this is a gift from my side that I am giving you my trade plan. Okay, my trade plan is about 36 pages, but I'm not going to give you that trade plan. I'm going to give you a small trade plan, which is good enough and which is full of information, and that is going to help you basically. You can change the strategy part the way you want, but it is my trade plan and it is, as for me, it is nice and good. I mean, so yes, so that is what I'm going to share you today, as well as I'm going to share you something else as well. I'm going to share you my trade log. The trade log, this trade log is very, very nice. I mean, I have built it, uh, with much hard work. Yes, a portfolio tracker. Yes, something like that. Something I have built. Okay. So this is something I'm going to give it to you. You will not get it in outside. So this is something I'm going to give it to you as a gift. And what I want, why I'm giving you the trade plan, because you will log your trades. And believe me, if you log your trades, the trade plan will tell you, I mean, there are options to even feed in the brokerage and the charges you pay to government, right? So everything is once you feed in, you will know exactly what amount of profit you are generating or loss you are generating. Okay, so it's automated almost like that. Okay, so this is something I'm going to give you today. So apart from that, I'm also going to show you one website, right? This is known as trade trade bench. Okay, so the name is a little bit wrong. It is trade bench. Okay, not trend bench. Okay, trade bench is a trade plan and trade log software. It is free. It is completely free, my dear friends. No charges are associated with that. And that is a software, beautiful software. You can create your own trade plan. You can, once you create there, you just need to feed in your trades and it will create a beautiful log for yourself. A lot of graphs you can see about your performances and all. So that is one thing which is known as uh, uh, trade plan and trade bench, and this one is automated. You can also fit it through API with your broker as well. So this is something is very, very nice, trade bench, which one can use effectively for planning and logging trades. So the website address is tradebench.com. This is free. You just need to create your account, and then there are certain parameters which you need to define. Once you define it, rest it is going to work for you. Okay, so write down these this one, and TradeBench looks like this. Okay, so this is the software, www.tradebench.com. Okay, so I have created my own strategies here. All these strategies are there, and once you go inside these strategies, here I have created my own strategies as well. Okay, so the strategies are defined how I am going to take this trade. This is about reverse zone. Okay, so this is something which I have created inside the trade bench, and I do trade a lot of best. I do log my trades here. So what happens, I get a clear feedback that when I trade a reverse zone or MIP or breaking zone, which amongst these three is actually giving me more profit, or which amongst these three is not giving me so much profit. So that helps. This logging helps. I know, okay, I'm more strong in reverse zones. So now on, I will only trade reverse zones. What's the problem? No problem, right? So this is a very nice software. You can go, there are videos there by the owner. He has posted some videos. You can go through them. You will know how to deal with this software, and this is a very, very nice software. You will love it. Okay. So try this software. Even if you can automate your brokerage and all here. So automatically every cost will be deducted, and I mean, even you can do complete risk management, position sizing, everything will be done automatically. Okay. So this is a very good software to do risk management, trade logging, trade planning, position sizing, everything. So you can, this is web based, so you can try it. Okay. Okay. So step number 2, I mean, first we need to know about the entry. We already know about it by analyzing prices through price action. Now you need to know the exits, right? The exits, the goals are very important. I need to have a goal for my business. So create a predefined risk management rule for each trade you take. Okay. You need to have the following predefined rules. I mean, it's up to you how you are going to define this. But it seems good when you are taking a big trade. Okay, when you are thinking of taking a trade like 10:1, 30:1, then this kind of risk management rules can help you. Okay, I know some of the traders who, I mean, they have a risk management rule that whenever price moves, I mean, even the target is high, but whenever price moves 0.05%, I mean 0.5%, they book the trade, entire trade. So that's up to them. That's up to them. I know those, I mean, traders as well, who books their entire trade at 3:1, or 5:1, or 10:1. Okay, so they do not book in between. They keep on holding it. That is their parameter of risk management. So what I suggest as a risk management parameter, I found it very good, is this is predefined before I take the trade. I will de-risk, I will create a de-risking point, right? And the de-risking point can be 1:1 and 2:1, because most of the trades will always give you 1:1 and 2:1 before failing, before getting stopped out. This is something happens. Okay. So there at 2:1 or 1:1, you can book a portion of your trade, not the entire I mean, not the entire or the full, whatever shares you bought, you are not going to square it off totally, but you will book up certain portion. It is ideal that you book 50% of that. Yes, I am saying it is 50%. Okay. So if you book 50%, think about that. Then say when at 1:1, right? Your risk is 3 rupees and you are booking 50% of your shares at rupees 3 rupee profit. Okay. So rest what you have 50% quantity. Now this 50% quantity goes and hits your loss, I mean stop loss. Will you make any loss there? Think about that. You will make no loss. You will out with the cost. In fact, you can make a small profit if you book it at 2:1. Okay. So this is why I recommend a 50% booking at de-risking point. It's absolutely your choice. Okay. Rest you can hold and you can book at different target levels. These targets are defined based on opposite trap zones. Where is my opposite zones? So I can book it as per those trap zones. Okay. So this is what I am going to do. Now I can do one more thing. What is that? Say 50% I booked at de-risking. I am now waiting. I have a opposite trap zone at say 5:1. Okay. The price hits that trap zone. I am out with another 25%. I am out. I mean, I'm booking another 25%. I have left over 25% only, right? Now what I do, I'm waiting. Now what price does, price gives a reaction from that trap zone and then engulfs the trap zone. Once that trap zone engulfs, this is what I do basically. Once that trap zone engulfs, I know that the trap zone is going to act as a hidden zone. I still have that 25% holding in my account. Now price is coming down to the hidden zone. What I do, I again buy more shares. Okay, I again buy more shares and I bring my stop loss straight away below that zone. Now tell me, will I make any loss in that trade? I will certainly not make any loss. Okay, so these are some of the parameters what you can keep for yourself. You can predefine your trailing stop loss. I mean, I'm not talking about go and open your platform, trading platform, and there is a trailing stop loss. I will automate it and I will flip. No, that is the stop loss which the institutions are waiting to take out. Okay. So the institutions are waiting to take out your stop loss. So do not take automated trailing stop loss. Do manual trailing stop loss. How? As I said, when price moves up, it will create new trap zones. Once it creates a trap zone, then bring the stop loss below that trap zone. In that case, if you do the trailing in this way, what will happen? You will never see losses in any trades. Okay, so this is one thing you can do. So predefined trailing stop loss strategy you can use. Yes, so another time I am repeating the predefined de-risking point. Say in a trade, if you have a risk of 3 rupees, right, what you are doing, you are booking 50% of your shares at 1:1, that is at 3 rupees profit. If you book at 3 rupees profit, what happens? Even if price comes down and touches your stop loss, the 50% portion will make 3 rupees loss and you already have 3 rupees profit. So overall, profit minus loss, you get, I mean, profit is equivalent to loss, so you get no loss there basically. No profit, no gain, no loss. So you are out at your cost. Okay. So this is one help, yes, in break even, correct. So you can get out in break even. Now you are holding another 50%. I mean, the price has not come down. You have booked 50% there at 1:1, and now you are holding 50%. Now this time what happens? Price moves up. Okay, and there is the opposite zone there, which is a trap zone. When price reaches that trap zone, you know this is the time. Now already you have earned 5:1, and you know by doing circuit analysis that price is going to go up further. Okay, price is surely going to go up further beyond the trap zone. Okay, so in that case, what you are thinking? Okay, let me do one more thing. Let me close 25% more, that is 75% of the holdings here at the opposite trap zone, and then wait with the rest of this 25%, right? And once price breaks that trap zone, I know it will again go up, right? Much, because it will go up by breaking one circuit to another. So in that case, what will I do? I will let price, I mean, once the trap zone is broken, I know that trap zone is going to work as a hidden zone. So what will I do? once price comes down to the hidden zone, I will again buy at that area. So in that case, I mean, uh, again, the same risk management I can keep on doing. Okay. So if I do in this way, I will never make loss. Okay. And as well as because a new trap zone got created, so I will move my stop loss below that. Okay. A hidden zone is a trap zone. Don't forget. And I moved my stop loss below the hidden zone. So I will never make loss. So are you, have you understood? So this is some of the strategies what you can do for yourself. You can build your own strategies as well. I do generally trade with 4 targets in mind. Whatever trade I take, I keep 4 targets in mind. I always keep a 1:1 target, 2:1 target, and then 5:1 target, and then the maximum target I have in mind. Okay, so I have always 4 targets. So at any point of time, if I get stopped out, I never actually lose much of my money. I mean, if you can, if your plan reduces stop losses, then what happens at the end, we will only left over with the profits. And at the end, we will eventually become a successful trader. Right, yes, and I do take care of all possibilities. Okay. So now this is a strategy what I do, and once an opposite trap zone gets engulfed, I again enter with more shares. Okay. So this can keep on happening. So this way also, I let the profitable trade to run further. I mean, why to book at 5:1 when I can actually end up with 30:1? So this is how you can continuously move up and make money. Okay. So these are some rules you can follow. And if price ever, if it is not giving 1:1 and if it is going down to your stop loss, at all times maintain your stop loss, because small losses are better than big losses. Small loss you can recover, big loss will ruin you. Okay. So at all times respect stop loss. If you have a stop loss, take it, book the trade, whatever happens, even if price moves up from that place, that's absolutely okay. What will I do? I will only learn from that stop loss. That is what I am going to learn. Okay. So respect stop loss at all times, as small losses are better than big loss. Okay. So this is, I mean, once you get my trade log, in the second page you will find this rules of trading. I have defined something for you. I mean, you can change it as per your own need, right? So I have defined something, predefined exit plan for short-term trades, something like this. I have defined de-risk at 1:1, first target 51% book, second target 5:1, right? Second target to get 25%, final target at 10:1. I mean, this can be changed. Okay, this is just indicative and not confirmative. Okay, so you can change it as per your thing. Okay, so this is some of the definition of the points. You need to follow the stop loss strictly. So this is a sheet which is already available in the uh, the position sizing sheet which I am going to share with you. I am going to share with you 3 sheets. Uh, so the position sizing will have this on the second page. Just go through this and you can change it as per your need. Okay. So step number 3 is understanding or knowing how to calculate position sizing. Okay. This helps us to buy and sell correct number of shares so that our risk per trade remains constant. Okay. So position size, how to calculate it? Simple. We need to get the maximum risk amount for each and every trade and then divide it with stop size, the stop loss size what we have. So how to calculate the maximum risk amount and stop size? So the maximum risk amount, the amount which you are ready to lose in a particular trade. In a single trade, the amount which you are ready to lose. Say you have a capital of 1 lakh, how much you are out of that in one single trade you are ready to lose. I mean, are you ready to lose the entire 1 lakh? Are you putting your entire 1 lakh in stake? Or you want a small portion is okay with you? Okay, so this is what this portion talks about, that what is the maximum risk amount I am going to lose per trade. I am ready to lose, okay, or I am going to bet for this trade. So the total capital, for say you have 1 lakh rupee capital, okay, and you decided that you need to decide what risk percentage you want to trade. I mean, what is the maximum risk you want to take out of this 1 lakh? I mean, in one trade, how much money in percentage terms you are ready to lose? So, say in this case, I thought, okay, 1% is good enough. Somebody, people may take it as 2%, 5%, depends on their own risk capacity. Okay. So, if I take 1% as my risk percentage, then my maximum risk amount is 1000. So 1000 rupees is what I am ready to lose in any trade. Okay. So this is the maximum risk amount. So this is the calculation of maximum risk amount. So the maximum risk amount is 1000 rupees for us now. Okay. So the next we are going to learn how to calculate the stop size, because we have already got maximum risk amount which is 1000 rupees. So we need to derive stop size. So how to derive it? Stop size calculation, the amount which is the difference between the entry and the stop loss value. Okay. So what is that? So for a long trade, the entry price, say 300, minus the stop loss price, say 295 is my stop loss. Okay. And if I do that, so I get a stop size of 5 rupees, right? This is what the stop size means. Okay. So same for a short trade, stop size is, say my stop loss price is 300 minus entry price, that is 295, is equals to again 5 rupees. Okay. So in that case I have taken the same number, but understand what happened here. This is a buy trade, so your stop loss is always below the entry price, right? This is a short trade, I mean sell trade, so your stop loss will be always above your entry price. Okay. So the calculation is just opposite, I mean, of long trade. So now this is the calculation of stop size. So we have the maximum risk amount which is 1000, and we have the stop size that which is 5 rupees. So now we can easily calculate out how much shares I should buy, but I mean for this particular trade. Okay. So this helps us to, I mean, the same thing is written here as well. So the position size is equals to maximum risk amount divided by stop size. So the maximum risk amount is 1000 and divided by stop size is 5 for this trade. I mean the stop loss value is 5. Some trade it may be 3, some trade it may be 5, 10. So it depends. Okay. So in this case it is 5. So the position size is 200 shares I can buy for this particular company. Okay. So if I buy 200 shares, even if my stop loss is hit, I am going to only lose 1,000 rupees and not more than that. That is the maximum I am going to lose. Okay, so this is how the position size calculation happens, and this position size is for single trade. Per trade, what I am going to lose. So if I buy 2,200 shares for this particular trade, I am only going to lose 1,000 rupees. This is a back calculation. Okay. So same way, position sizing calculation, the first stage is the account value. Then as I just talked about maximum percentage risk on single trade entry versus stop. This is what you learned in the last slide, right? So this is the first parameter of risk management. Then you have to learn, the next risk management parameter is current open risk percentage of all open trades. You may have taken 10 trades and out of those 10 trades, 8 trades are still open. Okay. So you have a risk parameter, say, you need to define a risk parameter that how many trades you are going to open. Okay. So same way to deal with this, you need to have, something like this, how many trades you will take if you are an intraday trader, how many trades you are going to take in a day, and how many open trades will be there. You need to have a daily risk parameter as well. If I have per trade 1%, then in a day I will have something like 3% I can take as my loss. Okay, in a day I can take 3%. So whenever you have 3 trades open, you cannot take the 4th trade. Okay, because it will make, as because each trade will have 1% risk, so 3 trades will make it 3%. So that touches your threshold, you cannot go beyond. So once another trade gets closed, then only you can take the 4th trade. This is how you should build your risk management. This is per daily. Daily trades, how many daily trades you are going to take. Same, how many weekly trades you, now in a week, how many trades you are going to take. In a month, how many trades you are going to take. Same way, in a month, how much money you will put in stake. Your capital. Is it 5% or is it 2% or is it 1% only? What is that? That also you need to calculate. Okay. So this is what it builds, right? So max percent of account value to commit. This is what these two are more or less same. They are done. You have 10 trades. If you have a portfolio, how to create a portfolio which is diverse, and the ultimate risk for each one of these stocks. If you do if you take all of them, consider all of them, your risk shouldn't go beyond 5%, something like that. Never ever, even if you are an investor, never ever put your entire money at risk. So you need to do diversification. If you are doing the diversification, what you are going to do, you will calculate the risk what you want to take in a portfolio. I'm ready to lose 15,000 bucks. That is 15% risk. Okay, this 15%. So if I have 15% risk and per trade I will take 1% risk. So how many trades I can take them? How in my portfolio, in how many stocks I can buy? 15 stocks approx, because 15% is the total yearly loss which I have determined. Okay, so this is how you can build your diversified portfolio. Okay, so these are the risk management parameters. So this is in the trade plan, you will find this sheet. Okay, you can change as per your need. Here you will put your account size. This is stocks, futures and options. This is commodities and this is forex. Okay, so you are going to put your the capital amount which you have in stocks. You are going to put in commodities or forex, and maximum risk per trade. How much risk you are going to take? 5,000 rupees, 1,000 rupees. That you need to define. maximum daily loss, as I said, this is per trade, this is daily loss, okay, that you defined. So if your daily loss is 5,000, so you can only take one trade probably, right? So maximum weekly loss what you can take. So all these parameters, monthly maximum monthly loss, all these parameters you need to define, okay, for yourself, and everything will this all things will change if you follow it, okay. Your it will make you a successful trader. So maximum open trades per day 3, you have defined that I will not take more than 3. Maximum open trades per week 2, maximum open trades per month 1, right? Something like that. This you can define always. I mean, it is not necessary that what is written here it will be, I mean, you have the same risk profile. It is not possible. You can have 10 as well, 20 as well. It depends absolutely on your own risk profile, okay? So something like this also added, allowed to hold trades over the weekend. Yes, some people do scare to hold trades during the weekends, okay? They do close it on Fridays, okay? So for you, you can define it yes or no. If no, then you are going to square off your trades on Fridays, and you are again going to open your trades on Monday. So this is something you can do. Okay, if it is yes, then you can keep on holding. So these are the risk management parameters which you will be requiring to do. Okay. So once your risk is defined, the next thing is to, once you take the trade, log your trades whenever you take them in Excel sheet provided in this session. I will provide you that. Step 2, step 5, review your trades once a while, write some healthy feedbacks and try to learn from your mistakes. Okay. So risk management helps to do fearless and emotionless trading, my dear friends. Doubtless, stressless, effortless, fearless. Okay. So enter the trade as per the predefined risk management and position sizing norms. Write the trade as per the predefined trade management norms, which is where I will book the profits, exit rules. Close the trade as per the predefined exit rules. I mean, you need to have this predefined things ready and you need to follow it like anything. Okay. So do not ever violate these rules, because these rules will, I mean, help you in coming days in your career, trading career. Okay. So that's the end of the session as of now. So go back to your charts and do position sizing. Whenever you are taking a trade, share your work with your mentor. All the best. Thank you, and do send your feedback to info@pushingwithghosh.com. Your feedback do helps me to serve you in a better way. Now I will show you the trade plan, the trade logs once, and then I will conclude the session. Okay. So just give me a second. So this is my trade log. All of you can see the drop box here. All of you can see it. Yes. Okay. So this is a Excel sheet. Everything is drop down. Even script names you doesn't have to write. Everything is in drop down. Once you download, you will see. So everything is written over here. Right. Your turnovers, your stop loss target, your profit, your return before charges, and the return. This is first leg brokerage and all charges, second leg brokerage and charges, total cost, right? Brokerage and other charges, total cost, actual profit, okay? And this will show the trade is in green or it is in I mean, red, what is there. So it will show you that, okay? Then you will have the analysis part, you will do it. I mean, it is a drop down list. you will just click on that and do the drop down, right? Then you get your revert to risk, okay? Target RR and your achieved RR, you will get it here. Then this is also a drop down list, your emotional behavior, what kind of a emotional behavior you had during the trade. This you can choose from the drop down, and this will help in review. Did the trade, did I trade it as per plan? Yes or no? You are going to write it so that, whenever you come back, you know what you have done, the mistakes. Okay, and you can put a link of your before and after charts, and you can put some healthy remarks and the end. So this is a trade logger which I am going to give it to you. Hope you have liked it. Okay. And the trade plan is also there. So this is a nice trade plan. You can just go and change this, choose an item. If you click on them, there will be a drop down list, choose among them. And this is how the strategy is written here. The strategy is written here, risk management rules. This is the thing where what I was talking about is some of this. So the time frames, analysis time frame, validation, okay, levels, refining, how to go about it, what to do in HTF, intermediate, lower time frames, okay, steps. Then if your distribution forms, how it looks, some examples also there, okay, how it breaks a good MIP as well, right? So these are, with explanation, everything is there. Some pro gap traps. So this is what a pro gap was there and which has failed, and I know that this is a distribution. Maximum targets can be this. All these things are there. This is as I said, this is my proprietary finding, and I've kept it for you that even if you see some such kind of a zone in your lifetime, you will know what to do. So this is an example I have kept with all the necessary whatever I could, I have written there, right? The stops, the targets, the trade management rules, scanning, right? So yes, on scanning part, I am referring to links here where you will find candlestick patterns, right? You can go there, you can put the candlestick pattern you want, and you will see which are the stocks where this candlestick patterns has appeared. And next what you need to do, you have gone through the advanced candlestick thing also. And my proprietary invention, stop loss strategy. Once a beautiful trade, a good trade gets engulfed, what you need to do. This is engulfed. I took this trade opposite. This is a stop loss strategy because it is a reverse zone. I took this trade opposite and immediately price gave me a fail and the target, and I am out without any loss. No, Jayaprasad, we have done it in advanced candlesticks. We use it as scanning. So that is already done. Okay. So some reference, I have 2 or 3 accounts, so some reference of that. So this is my trade plan, which I am going to give it to you, but you have to update it as per your need. This is something, and apart from this, I am also going to give you one position sizing thing. Where is the position sizing? I've kept it somewhere. Yeah. Okay, so this is my position sizing calculator. The yellow thing you can change. You can write your capital, the risk per trade, everything will be calculated thereafter. You just doesn't need to do anything. Only put the, if it is a long trade, as you can see, if it is a long trade, you put your target amount, your entry amount, your stop loss amount, and the calculator will calculate you and tell you how much shares you should take. Okay. Same for short trades, how much share you want to take. Just put the stop loss, the entry, the target, and it will tell you how many shares you are going to take. And this is very important, the capital and how much percent of your capital you want to take a trade. It can be 1%, it can be 2%, so it depends on that. So this is a position sizing calculator. Apart from that, this is the second page. You will have these rules, defined there. So go about it. You can define your more rules, as many as you can, right? So these three things I'm going to give it to you today, and hopefully you will like it. Thank you. Thank you very much for joining. That's all for the day. And I will send you email for this and you will get it soon. Okay. So hope you have liked this session. Please do, if you have not still, give me a rating and a feedback on a review on my Facebook page. I do take, why I'm asking you to give it to Facebook page, because many people who wants to learn price action, they are coming in my Facebook page and they get some guidance by looking into your reviews, looking into your uh, ratings. I do not want any, I mean, dishonest rating or feedbacks. I want your, I mean, whatever comes from your heart. If you feel good, if you feel bad, just give me a rating and feedback, please. Those who have given, I'm thankful to them, and rest who have not given right now, I request each one of you, because we are almost at the end of the lesson sessions. I expect feedback from each one of you. Thank you. Thank you very much. Good night. See you then.
Started.